One time we were in a forum where you did indicate to me that plans were underway for a mortgage guarantee structure that would enable you to push mortgages further downstream in this market. Any update on that?
Oh yes, we have essentially almost finished with the mortgage guarantee. So we call it a risk sharing facility because the idea is to de-risk financial institutions, to de-risk banks and de-risk circles so that they can be able to go, or they are a lot more encouraged to go down or further down market. So we have what we call Kenya Mortgage Guarantee Trust. Essentially we registered a company which is in form of a trust that is distinct or separate from KMRC. And the reason why we did that is it has a whole lot of different risks compared to the kind of risks that KMRC takes. And we, as much as possible, would like to have KMRC as a low-risk financial institutions for these reasons that we keep going to the market. And as a frequent issuer of bonds, we want the investors to see KMRC as a low-risk instrument or institution for purposes of potentially raising lower-cost funds. Now, so we distinguish Kenya Mortgage Guarantee Trust with KMRC. It will have its own balance sheet. It will of course manage its own risk separately. So it will be an institution under KMRC, but it's run separately, completely with a different governance. And that we already have. Now, we also had to develop frameworks. Initially, before we went there, we did a feasibility study and determined that the market actually needs this kind of instrument. So already we have the operating frameworks together. We had consultants last year who essentially developed the frameworks that we need. We did some benchmarking to compare with a number of other institutions that have done the same around the world, and we have a few, and we are ready. So the stage where we are right now is capitalization. So we have an indication already from the World Bank of 4 million euro of capitalization, which will essentially be the seed capital for that institution. The most important thing about this is that we still have a challenge, and so far KMRC is addressing an affordability crisis on home loans in Kenya, and that is driven mainly by cost of construction, which is high, expensive land, and to some extent limited financing. Now, when you look at rent, for example, as a share of household income, it's around 40%, which is a clear indication of an affordability crisis that we have. Yeah. It's very high. In most jurisdictions, I think they recommend it's about 30. If it could be less, better. Yeah. So with about 37 to 40%, that's already very high. And that's a clear indication of a crisis that we actually face, that a majority of the people, particularly on the low to income to middle income, are completely unable to afford decent housing. That's the solution that KMRC has been providing, to the extent that we're giving low-cost funds, single-digit rates, fixed rate, and even longer term, which essentially makes monthly repayments to be lower for people to afford. That is the kind of solution we've been providing to the country to support housing. Now, the mortgage guarantee will be an additional layer, and that will essentially help a lot more because it reduces the risk to a lender, because the default risk is reduced or manages that default risk. To a borrower, it helps a lot because when you have a default risk reduction, the expectation is that the financial institution should actually even reduce the cost of funds even more because there is a guarantee, right? Yeah. The other one is with high LTVs. Now, for example, you don't need deposit or to have a savings for you to be able to deposit because the guarantee covers high LTV mortgages. So that kind of solution helps the lower income, particularly first-time home borrowers, the people in the informal sector, and essentially people who do not have a regular income. So that's a solution that is an additional layer, which we believe will push the financial institutions even further lower market to be able to generate those mortgages of the people who at the moment will not meet traditional underwriting standards.